Hello. Sorry. Okay, no, this is not working. It's hot. It's too hot. I just really wanted to show off my new injective protocol hoodie. Look, it's so cute. Oh well. How's it going? Welcome back to the Technical Analysis playlist where we learn how to trade from beginner to pro. Subscribe for your weekly dose of technical analysis explained in very simple words for absolute beginners. Make sure you follow me on all the social media platforms. There will be links below for you to do that. And watch all of the other videos in this playlist if you haven't already. Last week we covered the types of candlesticks we may come across in trading and how to use them to determine our trading decisions. And this week we are going to cover market condition in simple words, how to identify an uptrend, a downtrend, and a sideways or ranging market, and how to draw trend lines. We will also cover market cycles and how to make money on the bounce. Watch to the end of this video if you want to know how we traders make the cash. Let's start with an uptrend. In an uptrend, we look for 3 higher highs and 3 higher lows. I just lost you there, didn't I? Well, let's take a look. Then I've just gone ahead and made a little picture here with an uptrend. This is going to be really funny, but I think I have to charge my pen and this is going to look very weird. I'm sorry. I'm not going to let that stop me from filming this video. I need a USB cable. You gotta learn as you go, right? Looks like I'm at a bank or something, right? And I've got this, oh yeah, I want to steal the pen, but I can't. Should we start? This here, what are you seeing here, right? This is the direction of the price. I know it looks a bit weird. It looks like just some triangles on a line, but no worries. We will explain this now. So imagine these are candlesticks. So this is your trading chart right here. Okay, this is your trading chart. And these are candlesticks. And you've got some green, some red and green and red. They can be any color. You can choose the color of your candlesticks, but usually green would be indicating prices going up and red would be indicating prices going down. Of course, you can change that. You can change those settings depending on what chart you are using. For all of this here, these are candlesticks. Candlesticks or OHLC bars. I use candlesticks, so I'm going to be using that word, but you can use OHLC bars. We've got this weird looking caterpillar. Uptrend, downtrend, sideways market, these are all market conditions. Before we start trading, it's very useful to identify the market condition, whether we're in an uptrend, in a downtrend, or whether we're in a sideways or a ranging market. So how do we know this is an uptrend? As we said, this is price going up and then a little bit down and then up and then a little bit down and then up. And this is the movement of the candlesticks. These here, this, and this, these are the peaks. So this is where price has peaked. Price has peaked here, price has peaked here and then gone back down, and price has peaked here and then gone back down. So first of all, we identify the peaks and then the opposite of the peaks. So where price has gone down low and then gone back up again, right? So see price has gone down and then back up. So we identify this here, right? It's gone down to here, stopped here, and then, well, we don't have another one, but let's just say price went back up. This would be another one, right? So we've got the peaks and we've got the lows. Let's say, for example, we have a certain price and then the price increases to $1.50. And then price goes down a little bit to this point here. And now we're at $1.40 and then price goes up more. It stops going up at this point and we have $1.60 and then it goes down a little bit, stops here at around $1.50 and then goes up. Price stops going up at this point at $1.70 and then goes down. Let's just say price stops going down before it goes up. And this is the low of the price. And let's say 160, for example, just to make things very simple and easy to understand. On a chart, it will usually look something like that. And you see how we've got one here, and one here. Usually as traders, what we do is we'll draw a line that connects the dots. The line doesn't have to touch the dot, but it will connect them, right? So we get pretty close. And then so we'll draw this on the chart. Price is peaked, and then it's touched, peaked, and then it's touched, and peaked, and then it's touched, right? So it's touched our trend line. It's an imaginary trend line that we draw on the chart as traders. So we use instruments to draw it. Earlier I mentioned higher highs and higher lows as the characteristics of an uptrend. What does that mean? Price is coming up this way. So the candlesticks are coming up in this direction, and then the price hits a peak here. We will call this the high of the price. Then it comes down, it hits a low. So this is a low. Then it comes back up, and before turning, this is the high of the price. So it's the highest the price is reached before it turns down. And then it turns back down, and then here, low. Then back up again. At this peak, we've got the high of the peak, and then we have the lowest point before it turns back up, before price goes back up. We are in an uptrend when this high is higher than this high, and this high is higher than this high, when this low is higher than this low, and when this low is higher than this low. So we have higher high, higher high, higher high, higher low, higher low, higher low. We need 3 higher highs, 3 higher lows to confirm an uptrend. We will have a look at a real chart in just a minute. Let's have a look at downtrend first. Downtrend is the same, but on the way down. In order for a downtrend to be confirmed, we need to have lower highs and lower lows. Price came from here, and then it stopped going up, and then started to go down, and stopped here, started to go up, stopped here, started to go down, stopped here, started to go up, stopped here, and started to go down. So let's say we have $1, and then here $1.10, and then here we have $1.05. Price is going up and down. We have $1.08, and then on the way down at the low we have 0.98 cents, and then we have, it's just an example, 102, and then it goes down. So that's what it means basically. Same for an uptrend, price will be going up, downtrend, price is going down. In order to confirm a downtrend, we need to have 3 lower highs and 3 lower lows. We can't call it an uptrend unless we have 3 higher highs and 3 higher lows. We can't call it a downtrend unless we have 3 lower highs and 3 lower lows. If higher highs, higher lows, lower lows, and lower highs are confusing for you, think of the top of the chart being the high area and the lower part of the chart being the low area. So we have a higher high at the top and a lower high at the top of the chart. And at the bottom of the chart, we have a lower low and a higher low. All right, so higher high and lower high at the top, and a higher low and a lower low at the bottom. So at the top, it will finish with a high, so something high, and at the bottom something low. So that is a good way to remember your higher highs, your lower lows, your lower highs, and your higher lows. In a sideways market or in a ranging market, we have prices going within a range. So price is going up and down, up and down, up and down, but not breaking the higher points or the lower points, but staying within a range of highs and lows. Let's say price starts at $1. It goes up and it hits $2. And then it turns. It doesn't go beyond $2. It goes down a little bit, it goes up a little bit, it goes down. And then it hits $1. And then it goes back up again, it hits $2. And then it goes down again and it hits $1. And there might be some movements in between. Remember that. It's not always a straight line. And then it goes back up and it hits again $2. These prices, they don't need to be accurate. It's more or less. So this could be $2.10, this could be $2.08, right? These are areas. They're not exact. Now you see price has been going up and down, up and down, up and down, up and down within the $2 and the $1 range. As traders, we will draw these lines. They are imaginary lines. These lines are not on the chart. So remember that. This is our job. Drawing these lines here is our job. We need to identify these key areas in the market in order to determine a sideways market. Same with the downtrend. This line here is not on the chart. We draw this line. Okay, so when we see this, we identify the high points and the low points, and then we draw the trend line on the chart. We draw it ourselves. So how does that look on a chart? Are you ready to have a look at candlesticks and proper actual trading chart? Let's do it. Can you guess if we're in an uptrend, in a downtrend, or in a sideways market? Let's do this together. We have a low point right here. We've got an upward movement, and then it hits this point here before it goes down. See how it's coming back down? And then it hits this low point here before it comes back up. It can't go any higher, see? So it's hit here. There's no more room to go, and then it starts to turn down. Right, what's the low point here? That's the low point. And then it goes back up again. High point. And then down. Low point. And then it goes up. You see, it doesn't stop here because see how it keeps going up, 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 up. See, here the price isn't really turning, is it? All right, so it's very easy to think, oh, but it's here, and oh, it's here, oh, here. Where is the top? Oh, no. Oh, here, no, here. Try to have at least one candlestick in between on higher time frames and at least 2 candlesticks in between on lower time frames. So from here, price goes up, hits this high point, and then goes back down. So as a trader in an uptrend, so we can see that this is making a higher high. That's a higher low. You see, that's the low point, right? That is the low point. And now we've got higher low. And now this one here, that's higher than this one, right? So that's another higher low. And then this one is higher than this one. So that's another higher low. And then let's just leave this one for now. Here we've got the high point, right? And then we have this dot. That's higher than the previous. So that's a higher high because that's higher than this one. And then we have this dot here. That's another higher high because that's higher than this one. And then we have this dot here, and that's another higher high because that is higher than this dot here. So we have 1, 2, 3 higher highs. We don't know what came before here. And we have 1, 2, 3 higher lows, but we can count this one because this one is lower than this one. So we have 4 higher lows, and we have at least 3 higher highs, which means that we have an uptrend. So that's confirmed. So low point, high point, low point, high point, low point, high point, low point, and high point. In an uptrend, we connect the higher lows. And this line right here, that is our trend line. And as I said before, we draw this line ourselves as traders. When we open a chart, it will look like this. We identify an uptrend by connecting the higher lows. This here, we were in an uptrend. What happened here is we made a lower low because this one is lower than this one, which was the previous. And so we broke the trend. Okay, so the trend is only this bit here. And then we broke the trend. Right, so this might be a change of direction, or we don't know what this is yet. We don't have a lot of information here, but this bar went lower than the previous low, which was this bar. So that's your uptrend. Let's see if we can find a downtrend and a sideways market movement. This would be the high point here, because if you look at this one here, this is lower, so we can't consider this, right? So this is higher, that's a higher one, but then we broke the trend. If that was going downwards for a bit longer, then this would have been a downtrend. We broke the trend, but now see, price is still going down. So this is the high point here, and then we have the low point here, we have high point here, and then we're going to look for the lower point before price turns again. So some traders will take it all the way down here, but for the sake of keeping this a beginner's video, we're going to stop here. Because see how price comes down to here and then it goes up to this point here. And then in another video, we'll cover why some traders will just take the line all the way down. This is just so that your eyes can get used to spotting the high points and the low points. Gonna look for the low. Well, I guess this point is higher than this one, right? So we can say this is a low. See how this is higher? Even though this is consolidation, we're gonna take the high from here. From here, this is the high point. We're going right down here to the low point, and then from the low point we come back up to the high point here. If we come here, this point here, it's not lower than here, is it? So this one doesn't count, right? So this is breaking the trend, and this point here, this is higher than this high, isn't it? So this is confirming that we might start to go back into an uptrend. It's not meeting the rules that need to be met in order to confirm the continuation of a downtrend. We're going to draw the trend line. We're going to draw the trend line. So we're going to connect the dots. So the dots are the highs. This is a high, 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 high. And these are low, 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 low. And if you notice, this high here is lower than this one. This one is lower than this one. This one is lower than this one. And this one here is lower than this one. This one is higher than this one. This one is higher than this one. And then this one is higher than this one. Okay, so let's draw the trend line. So from here we connect, 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 and we have a beautiful trend line connecting all of the highs. 1, 2, 3, 4, and 5. We only need 3 in order to confirm a downtrend, but we have 5. So this is a really good example of a downtrend. And then here we have 1, 2, 3, and 4. So in a downtrend, we're going to connect the dots from the top coming down. Let's have a look at a sideways market. I'm going to make a little box here. This is your sideways, your consolidation. So we're going to have a closer look at this. We'll have a closer look by dropping down to, we could look at it on the 15 minutes, and let's see if we can find it now. We're on the hour, so we had the hourly bars on the chart. Now we've got 15-minute bars, and I know this seems very complicated, right? Because this is time frame correlation now, and we're not there yet with our trading, but we will get there very soon. With a sideways market, instead of using trend lines, which we just used when we were connecting the dots, so we were connecting the high points, and in an uptrend we're connecting the low points. So we're connecting the dots from the bottom in an uptrend, and we're connecting the dots from the top in a downtrend. In a sideways market, we're using support and resistance. We will get into support and resistance in the next video. So I'm not going to explain it in this one. I'm just going to give a little hint of what it is. So see how we drew this box? Now I'm just going to get rid of it just because otherwise it's cheating. So we're going to get our line again. So you see how we were saying the $1, $2 price was $1 here, and then up here it was $2, and then down here it was $1, and up here $2, and maybe that's not quite $1, but down here is $1. $2, $1, $2. You see how this is staying in a range. So it doesn't have to be precise, but I'd say the range probably starts from about here, right? So some of the bars are going out of the range, and that's totally fine. So that's going to be your resistance up here. Why is this resistance? It's because price isn't going beyond the $2. The price isn't increasing beyond the $2. Maybe a tiny bit, but that doesn't really count, right? So usually we'd use a range, and by range I mean that price is within the $2, $2.20 range, right? Within here. So that's really going to be what your resistance level is. It's going to be within here. So your resistance is going to be contained within this price here. And then we have support, which is the bottom. Price is not going below $1. In average, we're just going to say it's keeping itself within the 90 cent, $1.20 range, for example, right? So see what is happening here with the candlesticks. They're just going up, hitting the top, so hitting the resistance, and then coming down, hitting support, going up, hitting resistance, going down, hitting support, up, down, up, down. If we take the lines, then we know we've got this point here. It hits up here. From this point up here, it's coming down here, and then from that low point it's going back up, and you get it goes down, up, Didn't quite hit it here, but it went back up and down and up and down and up, and it's just staying within this range here. When we're in a sideways market, it is extremely risky to trade. So if you're a complete beginner, you don't want to be trading a sideways market. It's going to be way more profitable for you to start your trading experience with an uptrend. It's easier to make money in an uptrend than it is to make money in a downtrend or in a sideways. So first easiest, uptrend. Second easiest, downtrend, but riskier. And third easiest, which is not easy, sideways market, extremely risky. There are strategies that you can use in order to trade a sideways market, but that's for the advanced. At the moment, we're just focusing on absolute beginners. One more thing that we should cover is cycles. While we are on the topic, it's just going to be so much easier for you to understand so that I don't have to explain it in a different context. Think of the market going up as taking a deep breath in. But then you take a deep breath in, inhale, and then you need to exhale, right? So a retracement would be the exhale. And the exhales would be shorter than the inhales usually in an uptrend. In an uptrend, the price will go up, big inhale. Imagine somebody running, the bulls running up to the moon. Big inhale, but then you have to take a little exhale. So that's going to be the retracement. And then big inhale coming up, and then little exhale. Big inhale and little exhale, right? And that's an uptrend. So you go, right? So it's not up in one straight line. It's never up in one straight line. There's usually little tiny retracements along the way. So it's more like up, like a little wave, up and down, up and down. Okay, and that is a beautiful uptrend when it's going really steep and then there's just little retracements. We have cycles in uptrends and in downtrends. An example of a cycle in an uptrend, as we said before, we have price going up and down, and then price going up and down. So one of these, and then another one of these, so two of them, is a cycle. Easy peasy, right? One up and down, that's a cycle. Inhale, exhale, cycle. What is a cycle in a downtrend? So in a downtrend, we have price coming from here, one, and then two, and then we have, that's a cycle. Pretty easy, right? I told you it was going to be quick. Let me explain phase one and phase two. It's within the cycle, don't worry. We're going to use an uptrend as an example. We have the inhale, little exhale, inhale, little exhale, and that counts for one cycle. If the trend is up, then this one here, phase one, because it's going in the direction of the trend. This one here, phase two, because it's going against the trend. This one here, phase one, and then this one here, going against the trend, it's going in the opposite direction. That's your phase two. It's going to be the same in a downtrend. In the downtrend, the phase one is going down because it's going with the trend, and then the phase two is a little retracement going against the trend, and then phase one is going down again with the trend, and then phase two. So it's just the opposite in the way down. So on the way up, in an uptrend, phase one is going up, and in a downtrend, phase one is going down. Now, the juicy stuff. How do we profit from this? It's actually very easy to make money in this way, by trading trend. Hope you don't mind me making another little picture. I'm not the best artist in the world, but you know, it does the job. For these examples, I'm just using uptrend, by the way, just uptrend. And if you're a complete beginner to trading, it's best you focus on the uptrend, as I said before. Okay, so let's make a nice uptrend here. So we've got price going up, little retracement, up, little retracement, up, maybe a big retracement. That's not a great sign when price starts to retrace like that. Then it can mean that the trend might start to reverse and turn into the opposite direction. So be careful with the big exhales. So if you're seeing big inhale, small exhale, big inhale, small exhale, big inhale or small inhale followed by a big exhale, be careful there. That means that we could be at the end of the trend All right, so you don't want to get into any trades there. You want to try to get in at the bottom. But in order to figure out the bottom, you need to have a cycle at least. Okay, so wait for a cycle, wait for an inhale, exhale, and then get in on the exhale and then ride the trend up to the top if you can. That's basically how you make money on the bounce without me actually drawing it for you. But let's do a little drawing, and let's go over here and let's draw. Now that you've seen a chart, you know what I'm talking about. I don't have to be great at drawing. This looks nothing like the chart that I just showed you, right? Just for the sake of making it look more like a chart, we're going to add a trend line. That made it worse. I'm just gonna have to draw that again. It's completely unacceptable. I actually drew it exactly the same as before. Let's stop with the nonsense. Oh, there we go. So how do we capitalize on this juicy little bit of cash? Let me show you how. We spot this. Oh, that looks nice. That looks really, really nice. Okay, okay. Don't get in there. You never want to get in on the top. Do not. Then you see a little bit of a drop. And you're like, okay, let's see if this low here, let's see if it stays higher than that low. So then price goes back up and woo, it's made a higher high. This one is higher than this one. We only needed to retrace a little bit and to make a higher low in order for us to see an opportunity. Price comes down and it stops here. It has made a higher low. It's made a higher low. Here we have a higher low. And because that is higher than that, we've got a higher low. And what does this mean? What do we do? Let me show you. We're going to enter here. This is where candlesticks really helps because you want to see a reversal. Watch this video if you don't know what I'm talking about because I made a video on reversal bars. It's called Types of Candlesticks. Look for it if you don't know what I'm talking about. So when we get to the end of phase 2, which you now know what that means, we look for a reversal bar. We probably have candlesticks, and then we have a reversal bar. Wait for the reversal bar to close. Important. Don't get in just because you see that a reversal bar might be forming. No. That's no excuse. Wait for it to close. And then get it on the next bar if it's a small bar. So then we get a bar here. And then what we do is we get in on this bar. We can put a little stop loss just under there. And we can put a buy order just on top of here. Or if you're comfortable with getting in at market price, then up to you. And then we ride it up. And we make the cash. We get in at around here. That's our entry. And then we're going to be making money all the way up here. And then we look for a reversal bar here. And we get out here. We wait for price to come down and then we look for our reversal bar, get in on the next bar, and then we make money up. That's how you trade trend and that's how you profit from the bounce. I'll make a more specific video on that soon, very soon, so you can actually learn the strategy how to do this because of course I'm not telling you to go ahead and do this right now because we're just understanding how we can profit from fluctuations in price. And that's what we do. We traders, that's how we make our money. So there will definitely be a video on that very soon. Make sure you subscribe so that you don't miss it. I think we can wrap this up for today. Would you agree? It's a lot to take in. Please remember to subscribe and like this video. And from wherever you are in the world, I hope you have a wonderful day. Bye bye.